So the markets are off to a rough start to begin 2024. We get headlines like this. NASDAQ falls for a second day following worst session since October. Apple declines again. And I want to go through sort of what's going on, share my thoughts, get yours as well. And I always appreciate coming back for more. So this one really caught my attention. Xerox is laying off employees, 15% of their workforce. And the first thing that came to my mind when I saw this was like, is Xerox still in business? I know I'm so mean, but no, seriously, I didn't know that they were. When I was a kid, Xerox was a major company, right? We used to tell people at the office, hey, can you Xerox that for me? Which meant copy. And I don't even know if young kids even know what Xerox is. I mean, seriously. And with the rise of email, there's always been talk that we would go fully, digital / paperless. That hasn't happened quite yet. However, during the whole COVID situation, it really kind of accelerated Xerox's fate. Now, in Xerox's defense, they may do other things than copy machines. And in fact, they're cutting their workforce and saying, hey, we're going to restructure, reorganize, and kind of reinvent ourselves. Xerox theoretically could pull it off. I'd be curious if anyone in our community works for Xerox or does business with Xerox, etc. But for me, I just branding wise, when I think of them, I think of copy machines, I think of legacy company, and I think not cool. So I wish everyone the best over there. But they have about 20,000 employees. 50% of the workforce is about 3,000 workers are losing their jobs. So it's an unfortunate situation, but like I said, the first thing that came to my mind is like, are they still in business? Now, I think the Xerox situation is very similar to the situation with Apple, and I'll explain why and how they're related. So first is when we talk about like these sort of companies that are selling new products, how often do you need to buy said products? So let's talk the situation of Xerox and HP. Just for example, let's say I did buy a new printer, a new device. I probably would have done that during the pandemic. When I was sort of reorganizing, if I'm going to work from home, go to the office, and what do I need in my home office, etc. So I bought said device, and then just the way that it is these days. Let's say example of Xerox, my new printer / copy machine may last 7 years, maybe 10 years, or whatever. Right? They last a long time these days. Same thing with the new iPhone. So my wife and I, we got iPhones a couple years ago, and they're pretty good. Battery life is great. The thing works fast, etc. I'm sure Apple will come up with some sort of software update to try to slow my device down to try to get me to buy a new one. They're not supposed to do that, but I'm sure they come up with ways to like get me to buy a new one software wise. The thing is though, is that it's hard to convince someone like myself to get a new phone when I feel like my phone is great. So this is a challenge facing Apple going forward, is how can you convince people to keep buying new phones? Okay, that's one. So can you get me through the door? Two, can I develop new technology to get me through the door? And that costs money. So I'm still waiting for my Apple flippy phone. Please bring it to me, Apple. And you got to pay your workers to develop said phone. So that creates another challenge because, as you guys know, with just the way our economy is at the moment, depending on where you live, housing is through the roof. And so you ask your employer for more money, and that puts strains on companies because they got to pay their workers more money, et cetera. And that eats into your profits. And so then you could raise prices. But if you raise prices, so say with Apple's flippy phone, that might be $1,500, $2,000, who knows? Are there enough people out there who have the money to buy it? And then that goes back to the Xerox situation. If people are losing their jobs, no, they don't have enough money to buy new iPhones, nor are they thinking about it because they're happily and perfectly fine with the current one that they have. So hope you guys understand this stuff. Moreover, you're also facing an issue with there's been some really recent developments in China to where the Chinese government are telling government employees, don't bring iPhones to work, don't buy these things, etc. So that's another challenge, right? And so is China starting to close its markets to Apple? Moreover, is the Chinese consumer, American consumer all around the world, do they have money and do they have the willingness to buy Apple? So hence you get these headlines. Apple hit 7-week low after Barclays downgrade on demand concerns. Will there be enough people willing to buy said things? Apple is not going to go out of business. Don't worry, you're not going to lose all your money if you have your Apple stock, but they may slow down and may not grow as much as they have in the past. So that's sort of why Apple's been expanding into streaming. Their Apple Plus is pretty good, actually. They got some good programming on there, and also too, they make money off the App Store, etc. But we've been seeing really interesting developments with, like, say, is it the ones who make Fortnite? I want to say it's Epic. I could be wrong. I think it's Epic. But they were suing both Google and Apple over like how they monetize their game, etc. So that's why those rulings become really important. it's a fight among companies for fewer and fewer dollars, right? And this also relates to the overall economy. Is the Fed printing money, putting more money in the system, so more dollars are everywhere, and also to where interest rates. If interest rates are lower, then it's easier for us to buy new iPhones on our credit cards, etc. But if the consumer's out of money and interest rates are higher, we're buying less things. So this is sort of how all these stuff are related. I just want to sort of tie it all together for you guys, and hopefully help you understand the markets a little bit better. Now, some things that are always funny about the markets is the crypto world. And I woke up today and I saw the news on Bitcoin. It was at 45-ish for a couple of days. Dropped, like drastically dropped, like immediately. You can see the chart right here. Went down to like 41. It was like, crazy news hit the markets. There was a hedge fund like thing that said, hey, we've got a rumor that the SEC is not going to approve the new spot ETF thing for Bitcoin. Essentially they're going to reject it all and make you do it again. And the market's kind of freaked out. So whether or not that's the truth, who knows? My personal opinion on this stuff is, in the past, the SEC has delayed it to the future, making any decisions on this kind of stuff. And that's probably their default position. So they may delay it again. Who knows if they'll reject it outright. There may be enough pressure on the SEC to approve said thing, but I'm not into this stuff. I just tell you guys about it because I do think it's interesting, and I do think it represents whether or not there's a bunch of sort of like speculative money in the world. So as long as these sort of bubbly Bitcoiny things are still there, that means the Fed still has more work to do, in my opinion, to get this kind of froth out of the market. The stuff that I actually look at though seriously, and Bitcoin is, it's not that I don't look at it seriously, it's just that I don't put money into this stuff myself, but I do track it in terms of like how much speculative money is in the market. But the stuff I really track closely is actually the currency exchange. I mentioned this from time to time on the market. I'm in Korea, so I'm always watching the US dollar and the Korean won. Now, if you look at this chart, and this will actually mirror, but in the reverse direction, our markets. So generally speaking, if you take a look at the chart, you can see it for yourself. 07, 08, 09, the dollar was really, really strong. And those were times when the markets were tanking. At the moment, the dollar is actually fairly strong. It's 1,300 to the won. And if you just look back, I don't know, a couple years ago, look at the chart right now. A couple years ago, it was touching around the 1,100 level, etc. So I watch this stuff every day, and it's really, really, really volatile. And so, whenever I see the dollar go up, the markets go down. And when I see the dollar go down, the markets go up. It basically plays an inverse kind of thing. And the thing that I've been thinking about when I see this kind of stuff is just like how unhealthy the markets are. My personal opinion is I think a lot of things are overvalued. That's just, how I feel about this stuff. Because when I put all this stuff together, it was like, there's layoffs. There's not enough innovation to get, consumers through the door to buy said products. And like, where's the money coming from to buy these things so that companies can make money? Moreover, as I mentioned to you guys before, companies have to pay people enough money to develop new stuff. And then when the numbers don't add up, like if the business isn't coming through the door like it was, then you have to start firing people, right? You guys get the whole gist of why we're talking about all this stuff together. Moreover, the reason why I talk about multiple things on this channel is because I want you to be successful, right? So this is sort of why I show you guys these kind of headlines. Like, look at here. Finding a new job is getting harder, right? I think this is the Wall Street Journal, and they put out a chart of like where the jobs are. And sometimes when you look at the unemployment data, it may not necessarily tell the full story. I've told you guys this before. So let's say the unemployment data, meaning that unemployment isn't like crazy high, but you may have a job, but just not the job that you particularly want. So according to this, you can see here, change in Indeed job listings by selected sectors since February 2020. So, who's offering the jobs? Like, where are the openings? And according to this is coming from Indeed, the openings are in childcare, food prep and service, nursing, and retail. The places that are not hiring, right, where there's a decline in job openings, according to Indeed, is software development, marketing, human resources, and banking and finance. And this kind of stuff, goes along with what we've been talking about the last couple of years. There's been a slowdown. It's just real. Like in the banking industry, and especially for young people who wanted to go into this kind of stuff. And if you're watching finance channels, it's natural that you would want to say, hey, I want to get a job at Morgan Stanley or Goldman Sachs or that kind of stuff. You're probably finding out that they're not hiring. Or if you want to go for the higher paying jobs, which is also in banking and finance, right? These kind of things. Software, the tech industry has always, I don't say always, but we'll just say the last couple of decades have been very, very good jobs. But a lot of these companies aren't hiring. And this is sort of why I'm tying it back to the Xerox situation and tying it back to also, are there going to be enough people to buy essentially expensive iPhones and Cybertrucks? So that's sort of going on with the markets right now. The rumor on the streets, and if you read everything, and I do, and I don't give you like play by play, and I could, but I'll just tell you, the Fed theoretically could be cutting anywhere from 3 to 5 cuts. That's what some of the people are saying. I myself am just saying, hey, I see what the Fed says. They say higher for longer. I also see that they haven't done anything. They haven't cut. They haven't raised the last couple of times. So if I had to bet, I don't think they're going to raise anymore. If I had to bet, but whether or not they cut, anytime soon, the more earlier estimates is going to be March. The later estimates would be November. The problem is, though, is that don't necessarily expect cutting of rates to suddenly, everything's going to be hunky dory. You want essentially the rate, the Fed funds rate, to be at a neutral level to where they're not just printing and making everything happy and jolly and overheating the economy. And you don't want them to be too restrictive to where no one can buy anything at all. The problem is, though, is that we've had free money for just far too long. And you had a lot of aggressive overhiring. It's just in a lot of tech companies and these kind of things. And also, too, you have a lot of people that just thought there was going to be a rosy scenario forever. Eventually, it's time to pay the piper. Moreover, this is an election year, so they might. This is just the reality of it. They're supposed to be neutral, but it's an election year, so they may try to just sort of stand pat as long as they can. Then after the election, then they really drop the hammer. That's could be a thing, and we'll see. So anyway, I do appreciate everyone's time. I hope this stuff makes sense to you. And my personal advice on all this kind of stuff is just be careful out there. Don't trust any politician to save you. Focus on you saving yourself. And I mention that way because whenever I bring up politics, people will start going, oh, I have to vote for that candidate because they're going to save everything. And I'll just repeat, don't expect any politician to save you. Expect to save yourself. And this is sort of why you want to be looking out for your career. You want to be saving. You don't want to be investing. Take care of yourself because you can't expect other people to do it for you. So I know that's not necessarily a great, how can I say? It's not necessarily a positive way to think about it in terms of that you want other people to save you, but I think it's more practical and positive in the sense of that you should believe in yourself first. So anyway, thanks again for watching, everyone, and I'll catch you next video.